Alright guys, welcome back to my channel. For the new subscribers, thank you for subscribing. For the viewers, thank you for clicking this video. So in today's video guys, I am going to be breaking down the Forex market structure secret that no one is telling you about, and how to actually read the Forex market like a pro, right? So I'm going to be using GBP/JPY to show you exactly how to read the Forex market, right? And it's actually very simple to do this, right? And I'll use my ebook to explain this for you, right? So what I'm going to do right now is I'm actually going to declare my chart and then start from the beginning, right? So basically how it works is this, right? The first thing I do is I go to the daily time frame to actually, do my top-down analysis first. But basically guys, what I'm going to be doing first is actually explaining to you what happened during the week of GBP/JPY, right? So if I turn on my session indicator, you're going to see that, this indicator basically shows you, how the week started, right? So this is the last week, and then this is this week, right? So if you want to get this indicator, it's called weekend, Saturday, Sunday indicator. But basically how we do is we first start with the daily time frame, right? I only use two time frames guys, the daily and the 1 hour time frame. So what I do first is to mark my area of interest, right? Now the strategy that I use is called the ICC concept, right? And in this ebook that I made for you guys, my area of interest just basically means, I'm showing you a clear demarcation between the buyers and sellers. So for example, on the left hand side here, you can see that price is a little bit confusing, and if I told you to take your trades, then you'd be a little bit confused as to where you want to take your trades. But on the right hand side, if I told you to take your trades from, let's say, the white lines, then it would be a little bit easy for you to take trades from there, right? So that's basically what it is with the daily time frame. So how it works is we look for where price has shown a clear demarcation, and when I say demarcation, it just basically means in this area price has shown is breaking and retesting around that area. Essentially it's basically just breaking and retesting around that area. That's basically what the demarcation mean, right? So in this case here, I can see that this area right here has a clear demarcation. Boom. So if I mark this area right here like this, and I color code it to blue, which shows the daily chart, right, you can see that okay, above this area price was literally breaking and retesting, literally, right? So if I do something like this, boom, above this area price was breaking and retesting. As you can see, broke and retested. It's broke, retested, broke, retested, right? Same thing here, right? It's retested here, it broke, came back a little, it took a while, and then it now retested, and now look, is retesting multiple times. So this is basically the first area of interest here, and then the second area of interest I see is now going to be this level right here. So something like this. So if you see right here, boom, this is like what is close to the daily time frame right now as we speak, right? So something like this. Now the reason for this is because, as you can see, it is retesting right here, right? It's retested here too, although it's technically broke here, right? It's still retested here, and then later on it now respected it on here, basically, right? So even though it kind of disrespected it here, it now came back to respect it again. It now disrespected it, but it now came back to now respect it continuously. So this is basically why I marked this up here. And also, like previously, what happened here is, before this move happened, I actually had an area of interest right here, so somewhere around here, boom, right, in my earlier markup. And then as you can see, price took out the highs and then retraced and sold, as you can see, right? So this is basically why I have this area of interest right here. And as you can see, price broke, retested that same area, as you can see, retest, retest, so same thing, right? So this is the daily time frame. Now we move to the 1 hour time frame. So like I told you guys, I'm going to be analyzing what happened during the week. So if I turn on this indicator right now and I look for this, so this is basically how the week started, right? So that's basically where the week started at this point here. So before any of this happened, right, before any of this happened, we're actually going to be following the market, right? So basically what happened is this: price, right, was basically creating higher highs and higher lows. So in this case here, price actually broke trend, so it was actually bearish here, right? And then it broke the previous high, which indicates a change of trend. So in my ebook, I tell you guys, whenever you're looking for a change of trend, you wait for price to what? Break the previous low, right? So in the case of a downtrend here, is the same thing. You wait for price to what? Break the previous high, and then once price breaks the previous high, you wait for the retest and continue the trend up. So as you can see in this case here, price came, created that previous high, broke past it. In this case, it did not retest perfectly fine, But if you notice here, right, price now came, created a high, and then created a low. Now, when it comes to creating your lows, guys, whenever I see something like this, right, price is doing this, right, so it's doing something like this, boom, 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 boom. Sometimes you might ask me, like, how do we understand what these points are? Because these points are very important for you to understand. Now, these points is what we call the low or the pivot points of the market, right? So essentially, guys, if I was to go back to my chart, right, if I was to go back to my chart right now, if I was to mark this, right, like this, if I was to mark it like this, how I actually mark this is basically like this: boom, 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 boom. This is basically how I would mark the market, right? So I wouldn't actually take this here as a low and mark it like this, where it's going to be like this, boom, and then mark it like this and then go like this. Why? Because when it comes to understanding what these pivot points are, which is the actual lows of the market, which is in this case these points, right, we clarify those lows based on the fact that price has what, at least 2 sell candles. So in this case here, since price was in an uptrend, right, price needs to have at least 2 sell candles, you know what I mean, to qualify this as a low, right? So as you can see, this cannot be considered a low, this cannot be considered a low, right? But this can be considered a low here, but technically speaking, this will not be considered a low, which, because if you have the eye for it, you understand that this is the actual low here, because, you know, even though it came and created this low here, it still kind of did something like this, right? Did something like this, boom, and then like a small push down like this, and then continued up, right? That's basically what happened there. But the point is, guys, for us to consider a low, it has to have at least 2 sell candles. So in this case here, price has at least 2 sell candles here. So at this point, price created what? A high, right? A high. So if we zoom in real quick, you're going to see that this bullish candle here is higher in terms of the body close than this body closes right here, right? So that's basically what happened here. So usually I look at the market from 7 p.m. Asian session, right? So this was around 7 p.m. right there. So this was the close right here, right? Now, whenever you see this big candle in my ebook, I literally say, right, now whenever you see a reversal pattern, right, a big sized shooting star, you take that as a reversal pattern. So in this case here, right, understand the confluence, right? So price was creating higher highs and higher lows. It reached a high right there. So this high is basically this high right there. Now, when this high was created, it also gave a signal, a reversal signal. And the next phase we have is going to be the correction phase. So obviously, this correction phase is actually going to be a reversal phase in this case. And also, as you can see, price is also reacting from this daily area of interest, as you can see, right? So of course, the confluence will be, okay, I have a big shooting star candle, and you know, in this ebook, price has said, okay, whenever you see a shooting star, then it's a reversal, right? So we are going to assume that, okay, price is likely going to sell from here or give a really good reversal. So in this case here, your first trade would have come on a Sunday evening, literally, and you would have taken your first trade right there, boom, right? And then for stop losses, guys, in my ebook, I actually say that whenever you're placing your stop loss, you should have at least 6 pips of stop loss hunt, right? So I actually say it's somewhere in my ebook, right? So you actually need to have at least 6.4 pips, right, added to your stop loss whenever you're actually marking your chart. And the reason for this is because of stop loss hunters, right? So in this case here, I would place my entry right there at this close of the candle, and then from the actual candle high, just add 6 pips or 6.4 pips. So in this case here, this will be, so 20 plus 6 is going to be 26.6. So basically 26.6 is right there, boom. 26.6, 28, same share. As you can see, price did not actually tag you out, boom. Price did not tag you out in this case here, right? So in this case, you would have easily hit a really nice 1 to, you know, 1 to 2 risk to reward, or even a 1 to 7 risk to reward, depending on how you want to trade the market, right? So this would be your first trade. Now, I usually trade during the Asian session, right? As you can see, this is the Asian session trade. So now, this is the start of the week. So we can actually close this right here, boom. Now, the second trading week was now here. As you can see, price now opened up, right? So this is basically how we mark our chart. So in this case here, before price gave us this move, right? Before price gave us this whole move, right? We actually marked our area of interest right here already. And then also, we actually had an area of interest right here, boom. This was an area of interest. So if I was to turn this off, because this kind of looks confusing. right? This was the 1 hour area of interest. Why? Because you can see price was breaking and retesting in that same area. Boom, right? And notice how price broke, retested, right? It gave this, you know, I mean, when price created this high here, you had marked this right there. Boom, price broke, retested. This will not be another second entry if you really wanted to. So this will be your first entry right there, and then your first entry right there. Boom, and then your second entry right there again here. And then same thing, stop loss should be at least 6.4 pips above your candle high. So in this case here, it's going to be 38 points. So it's going to be 39.2 or something like that. So 39.2, right? Boom. And then obviously you'd follow your trades to the downside right there. And then you'd pull out either at this area of interest or a 1 to 2 risk to reward, depending on whatever you want to choose, right? So that would be the first case right there. So now in this specific case here, now as price was developing, right, we now waited for the Asian session to hit again. As you can see, boom, price came on this spot, right? So what we're going to do is we're going to mark it again here. Boom, right? So the Asian session, you know, started on this candle here. So usually I start to look at the chart from 7 p.m. because around that 5 p.m. to 6 p.m. price usually have like really high spreads. So it's from 7 p.m. So essentially, guys, you notice again, if you are following the market, right? Now this is basically how you would follow the market, like this. So when price created this low, it's created a high here, broke the previous, you know, low to change the trend now from buys to sells. And now this is not actually a high, although it did retrace, right? But the actual, it actually just sold down like this. This is basically how I would mark the chart, like this. So like this, boom, and the price now created this high here and then created this low here, right? This is basically how I'm going to be following the market, right? I'll give you again, and then price now finally broke above this previous high with this candle here, right? It broke and then created this high here and then created this low here, boom, right? And then from there, I would say it actually created this low here, to be honest, because this low here and then this low now created this high, right? And then it now continued to buy up like this and then bought from here, boom, like that, and then broke below to change trend, but then now reversed again and then gave another entry again for a reversal pattern to then now sell. This is basically how you follow the market, right? And then these points, right, if I was to move this right here, right, so an empty space, right, boom, now these points here, so in this case here, this was a downtrend, these points were the previous high. In this case here, this was a previous high, and these points need to have at least 2 sell candles. So in this case here, when price was in a downtrend, right, when price was literally right here, for the trend to change, you know, from these sells to buys, price needed to break this high. Do you understand? Right? And then until this happened where price now created this high and then now finally broke the previous low here, right? It now broke the previous low in this case right here, boom, right? As you can see, once it broke the previous low and closed below it, this will now be the new high. So now this is the high, this is the previous high, right? So previous high, and then this is the high. You get it? And then from there, this will be the break of structure or the change of trend, quote unquote. And then this will now be the low of the market. Now this is the low, or yeah, this is the low, right? At this point where price was here before this happened, this, oh my god, what is this? Oh my days. But at this point, guys, literally this would be the previous low right there, right? And then this will now be the high. And basically for the trend to change now from buys to sells, it will have to now break this specific previous low like this, and then I'll continue the sell. But basically, see what happened here. Price came, created a low, and then created a high here. It did break above this previous low here, right? But as you can see, Forex is not 100%, right? So as you can see, price now came and then now broke structure again. But then at this point here, price gave a reversal entry, and then this was the move that you could have caught, right? So now, if I actually go back to the chart, you will see that again, like I said, these lows need to have at least 2 sell candles, right? So if I was to go back here, you're going to see that, okay, boom, actually do this, boom, you're going to see now that these lows, see, as you can see, this high has at least 2 buy candles because the trend was still bearish down. 2 buy candles. This low here has at least 2 sell candles here. This high has at least 2 buy candles because now the trend is now, you know, bullish, right? So now this low here has 2 sell candles. This low here has 2 sell candles, right? This low here has 2 sell candles, right? You cannot mark this as the low. So you see how I literally brushed past this whole move here, right? I did not count this as a retracement in a sense, right? Because it's a retracement, but when it comes to this strategy, guys, we use the pivot point, right, to follow the trend and know when the trend has changed, right? That's mainly what we use it for, and then know how to follow the trend essentially. So when it comes to following the trend, we don't really mark this here as the actual low. We just understand this is the move. You understand? So whenever you're marking something like this, so whenever you mark something like this, where price moves smooth like this, right? Oh my days, where price moves smooth like this, obviously there's going to be noise in the middle of this whole move, which is of course this wick that we experienced right there, right? But we have to ignore this and understand that what we need to understand is this point right here, so we can actually ignore this noise and understand that, okay, at the end of the day, what actually matters is the pivot points, right? Whenever you're on the trend, so in an uptrend, what matters are the lows in the uptrend, right? That is the pivot point for the lows. And then in a downtrend, what matters, right, is going to be the highs, right? Because this tells you when a trend has changed, right? That's basically why we use this pivot point. So back to the chart, right? So in this case here, this was the start of the Asian session, right? So boom, price came, right? So we usually look at our charts from 7. As you can see, price closed here, right, on 7 o'clock. Now this candle, as you can see, is now a shooting star candle, right? Now this specific phase is basically the correction, or actually, what am I saying? This specific phase here is actually the end of the continuation phase, right? Because if we look at how the chart moves, you're gonna see that price, right, will give you the correction phase and then continue. And then in the case of an opposite trend, right, you can see that price will come down. Once it gives you the end of the indication, then it now starts a new correction phase. It gives you a new indication and then corrects itself and then continues the trend and then stops and ends at that indication and then gives a new indication. That's basically how the chart moves, right? So in this specific case here, price was basically like this in this point. So in this specific case here, price was basically like this, was basically down here. This is basically where price was at this point. So because price has created a low, we expect a high. Now whenever we expect a high, it's based on the signal it gives us. So in this case here, the signal it gave us here was basically that this body close here was a shooting star. So in this case here, when price was going down, price now gave a shooting star entry. So this shooting star entry will now take our, entry right there, and then stop loss is now going to be 6 pips below this body close right there, so somewhere around here or somewhere around here, and then TP is going to be a 1 to 2 risk to reward, right? And then notice again, the trend is still, sells. So in this case, you're actually taking a counter trend move, right? Because notice what happened here. The next candle happened here. Now in this specific candle here, you can actually watch that price was actually almost entering a range, as you can see, boom. Before like this whole move happened, price was like in a range here. So when we are watching this candle from here, price gave this entry, we took our entry, boom, this bullish candle came like this, and then the next hour price now closed here. When price now closed here, this is your entry to now sell. You get me? Because the trend is still bearish in this case, right? So again, price was going down, price now gave this shooting star entry, price went up, right? Sorry, actually, what am I doing? Yeah, price went up like this. Price respected this high because this is now the high that price needs to break for the trend to now change from sells to buys. So in this case, price came approach that high. As you can see, it did go above it a little bit, but they now closed below with the Harami pattern, which is now your sign to now enter the sell to continue the trend, where to the end of this place right here, as you can see, price did go, it now respected it, closed above it, and then from there a couple hours later it now broke the previous high, which is this high right here. And then once it broke the previous high, it now retested, boom, and then now continue the trend up. In this case, as you can see, it's continued the trend up. So you see how we are literally reading the forex market, right? And then guys, basically how you'd have taken your trade is you could have taken your trade right there, boom, like that, right? Stop loss right there, and then a simple 1 to 2 risk to reward, like that. You'd have probably be taken out, obviously, right? Because price did take you out, obviously, here in this specific case, boom, right? So price was in a approached your TP a little bit. So in this case here, you would have actually pulled out here because you know that, okay, whenever price has already crossed that indication level, right, like it buys up, whenever price has crossed this previous high, anything can happen, right? So it's always good to secure your profits right here, maybe put your stop loss break even or something like that, right? So in this case here, you would have either lost here, or you would have understood or have the knowledge to understand that, okay, when price gives you that indication move, right, and ends at that indication move, then you now either secure profits or pull out or whatever. So in this case here, boom, price now came and now broke free later on. So if we go back to the session, as you can see in this specific case here, you'd have actually taken a bad trade or you'd have lost, depending. And then the next session now happened here, boom. So the next Asian session happened right here, right, boom. Oh, someone say sorry, right there, so you can see, right? Now at this point here, price has not done any of this. Price has not done any of this, right? But notice how we still had this previous area of interest right here. So if we draw this out, we still had it right there. You see how price moves, eh? Really that simple, right? And as you can see, boom, then the Asian session hits, right? And then as we begin to trade the market, price now gave this entry right here. Actually, price gave an entry, not really an entry here, because in this case here, like if you notice guys, price gave like a entry, right, a shooting star entry, like to buy up, but obviously like price is like still high enough, like it's too high to buy. Like we usually take our buys like from an area of interest, and if anything, we're looking for sells here because price, is like literally up here, you feel me? So in this specific case here, we're looking for sells in this case. But if I ignore this session and then wait for price to now sell, and then give this entry here, which is a shooting star entry again, which makes price to continue, we would have actually taken our buys right there, boom, and then our sells, like not our sells, but our stop loss below the candle, 6.4 pips below the candle. And as you can see, price did take you out here. But guys, I actually have some secret that I actually want to show you guys how you can actually avoid this loss right here. So in my ebook, I actually have a section where it shows you guys how to actually place your stop loss, right? So we actually have different types of ways you can place your stop loss. So the first way is going to be the 6.4 pips way, normal. But the second way, guys, is now going to be the doji way. Now if you notice guys, these doji candles here actually show signs of a strong resistance or a support or whatever. So in this case here, you would have marked the last doji. In this case was this one, boom, right? And then whenever you see something like this, you just increase your stop loss to make it below the doji wick. In this case it was right there. As you can see, you would have actually avoided this loss, quote unquote, right, in a perfect world, right? But I'm just giving you guys some source that you can actually use, right, and then have a target 1 to 2 risk to reward. But guys, let's just assume, like we actually did lose them. We lost for that day, you feel me? And then for the next session, we lost for that day. The next session, guys, is now right here. So we can actually do something like this, boom. The next one is right there. Now with this session, guys, remember there was an actual area of interest right here, right? So boom, we'll mark it like this, extend it to the top right here, or something like this, boom. This is basically what we would have done, right? We are waited till 7. In this case here, 7 was this specific body close candle right here. This was 7, right? So in this case, this was 7. So now in this specific trade here, you can actually take a trade here if you wanted to. Well, actually no, because price was actually still bullish at this point. So price was still bullish, so we actually waited for a bullish signal to hit the market, right? We didn't get any signal, so price now finally broke trend. Price now retraced up here, right, giving like a strong sign of bullish momentum. In this case here, this would have been like your area of interest right here. Boom. So you'd be looking for sales in this point. So price now came, gave this candle, and then now gave this candle here. So this is technically like a sell candle, but I wouldn't say this would be like a entry I would take, because this entry doesn't look good, because this is like an indecision candle, and then the next candle is also an indecision candle, even though it looks like a bearish engulfing. So you would have actually ignored this entry. Next candle came, it gave you this bullish momentum candle. This is basically like a reversal pattern, quote unquote. So in my ebook, literally guys, I show you guys that whenever you see a pattern like this where it has no wicks, right, and then it gives like a bullish engulfing, this would be a reversal pattern. So in this specific case here, this would be like a reversal pattern, right? So if you read the market like this, you would know that, okay, price was bullish, right? So creating lows like this, created a high right there, created a low right there, and then a high, and then I broke below that previous, you know, low here. Now obviously when price gives us that indication like that, we're expecting a retracement up. So coupled with the fact that we now see this bullish engulfing candle, right? So we're going to say, okay, boom, it's likely going to be a reversal. As you can see, price now literally now reversed to the daily area of interest, and then gave literally the same signal it gave right here, right? Boom. And then this is still within the Asian session, and as you can see, boom, you take your entry and then sells, basic, right? Boom. Then guys, same thing happened here again. Let's see the next Asian session. So right here again, as you can see, the same area of interest is still being maintained. So you see how this area of interest is literally still being maintained right here, right? As you can see, boom, the next session started right here, right? Boom. And this is pretty much self-explanatory. Price gave this, you know, signal here, right? So again, it's that same doji, you know, still being respected even from way back here, right? And then as you can see, price gave this huge shooting star pattern, and then, like I told you guys, whenever you see patterns like that, right, you're expecting a what? A reversal. Simple, right? And as you can see, boom, price now gave this reversal pattern here, multiple, you know, shooting star entries, and the language, this is basically telling you that price wants to keep buying up, right? So, you know, it might get confusing sometimes, because, you know, even the trend is still, you know what I mean, sells, and there was actually this area of interest right here, if you peep this, right? So it was kind of still confusing in a sense, right? Because price was still giving you guys some sells here, right? But at the end of the day, guys, the reversal came from this entry right here. So if you notice this, right, where you see back to back shooting star candles, bro, it's like a sign that a reversal will happen in the near future, right? So in this case, if you are stuck to your gut and, you know, taking this trade here, you would have, you know, come out victorious here. And then in this specific case, if you can peep this, guys, this is basically a Harami false breaker. So these three candles here is a Harami false breaker, and guys, you see this every so often, you know what I mean? And guys, I actually saw this pattern here play out, but I was actually in a sell, and it is what it is, guys. I got stopped out. But as you can see, guys, this is basically how you would have actually caught good moves here, right? So next time, guys, whenever you see candlestick patterns like this in the 1 hour time frame in an area of interest, likely in the future there's going to be, you know what I mean, a reversal. And notice again, price was actually like ranging. So in this specific case here, I would have actually taken my profits at this TP point here, and then waited for an entry again. In this case, it was an entry, and then took price up, right, and caught that breakout and then continue buying. So this is basically how you read market structure, guys. right? This is the secret of how to read market structure, guys. Nobody's telling you about this, guys. You can do this with any pair. If you go to a random pair, let's say ADJ or AUD card, it's the same thing. Price still respects the lows and stuff, right? So if you notice, guys, I'll literally give you an example. Boom. So we can actually start. Oh my god, we can actually start from here, guys. Literally from here, right? This AUD card, right? Random, guys, as you can see. Boom. Price was literally selling, right? Price came, created a low here, now created a high, and now created a low here, and they now broke the trend. Why did it break trend? Like I told you guys, a low must have at least, you know what I mean, in the case of a downtrend, the high must have at least 2 buy candles. As you can see, this was a 2 buy candle, so the low can be very close to itself. This is a really good setup right here. As you can see, price broke, right? Break of structure was right there, right? And you can see break and retest, literally break and retest right there. Give you a shooting star entry, you'd have taken your trade, boom, like that, boom, 1 to 2 risk to reward or whatever, like that. And as you can see, guys, like let's actually follow the market, right? So notice how price, right, literally once it's broke, right, the previous high to change the trend, this is now the new low we watch out for. Price now gave this huge, you know, candle to buy, and then let's see, price now created this low here. This is going to be the previous low, so now I'm actually marking the previous low for you guys, right? As price keeps progressing, right, marks this previous low here, and then now creates a high, right, and then creates a high here like that, right, boom, and then now create another low here like this, right? So I'm basically marking the previous low for you guys. So basically what that means is, if let's say, you know, if you do this like this, and let's say you were at this point right here, right, the previous, if price was to, let's say, break this, then the trend will now change to sells, right? Again, same thing. If let's say you were right here, right, for the trend to now change from buyers to sells, it has to break this low. So if price now does this and closes, then you now expect a sell. Same thing again here. As you can see, you're literally right here. So if price was to literally sell all the way down here and then now break and close below it, then you can expect a sell to the downside, right? So same thing is happening here, as you can see. So literally, guys, notice how price came. When price came and respected, like, let's actually do this. When price came almost down here, as you can see, it literally even crossed it, right? So notice where the wick even ended, right? The wick literally ended right at the, like at the, okay, literally at the tip of the body close right there, as you can see, right? So literally, guys, price still respected that low. So this is basically how to read the forex market structure, guys. Like literally nobody's telling you this, guys. I mean, maybe Alex G is telling you this, but honestly, guys, no one is telling you this in the forex markets. No ICT trader is telling you this, guys. But basically, guys, I hope you guys enjoyed this video and I hope you guys gained a lot from this. I'll see you guys in a different video. Peace.